You don't need to be rich to start investing. In fact, you can begin with just a small amount of money. Yes, you read that right. $100 is all it takes to get started. With just $100, you can begin your journey to financial freedom. It's a small step that can lead to big rewards. Investing is like planting a seed. The earlier you start, the more time it has to grow. Your money can work for you over time. Many people think investing is complicated and only for experts. That's not true. Anyone can learn the basics and start small. Starting with a small amount like $100 is simple and a great way to learn. It's about building good habits early on. Think of it as an investment in your financial education. The knowledge you gain is invaluable. The key is to take the first step. Every journey begins with a single action. Don't be intimidated by jargon or complex strategies. There are resources and people to help you along the way. We'll break down everything in simple terms. You don't need to be an expert to start. Remember, everyone starts somewhere, and your $100 can be your ticket to a brighter financial future. Start today and watch your money grow. Imagine two people both investing $100. One starts at 20, the other at 30. That 10-year difference can mean a huge difference in earnings over time. This is the power of compound interest. Compound interest is like magic. It's the interest you earn on your initial investment plus any interest earned previously. Essentially, your money starts earning money, and then that money earns even more money. Starting early allows you to ride out market ups and downs. The longer you invest, the more time you have to recover from any losses and benefit from long-term growth. So don't wait. Time is your greatest asset when it comes to investing. There are many ways to invest your $100. Let's look at three popular options: stocks, ETFs, and high-yield savings accounts. When you buy a stock, you're buying a small piece of a company. You can make money when the company's value increases. ETFs are like baskets of stocks. They offer instant diversification, spreading your money across different companies and industries. High-yield savings accounts offer higher interest rates than traditional savings accounts, helping your money grow steadily over time. Each option has its own risk level and potential return. Stocks can be volatile but offer higher potential returns. ETFs provide more stability and diversification. Savings accounts are the safest but offer lower returns. Section 4. Weighing the scales. Benefits and risks of investing. Investing offers numerous benefits, but it's important to understand the risks too. By carefully weighing both, you can make more informed decisions that align with your financial goals. Let's talk about the benefits first. Investing can be a powerful tool for building wealth and securing your financial future. Investing helps you grow your money over time, outpacing inflation and increasing your purchasing power. This means your money can work for you, generating returns that compound over the years. Whether it's buying a house, retiring early, or traveling the world, investing can help you achieve your financial goals. These goals become more attainable as your investments grow. Plus, it provides a safety net for unexpected expenses and future financial stability. Having investments can give you peace of mind knowing you have a financial cushion. Now, on to the risks. Stock prices fluctuate and you could lose money in the short term due to market volatility. This unpredictability can be stressful for investors. Not all investments perform well, and some carry higher risks than others. Diversifying your portfolio can help manage these risks, but it's not a guarantee against losses. Inflation can erode the value of your money over time if your returns don't outpace it. This is why it's crucial to consider inflation when planning your investments. Understanding these factors will help you make informed decisions and choose investments aligned with your risk tolerance and financial goals. By being aware of both the benefits and risks, you can navigate the investment landscape more effectively. Section 5. From $100 to Financial Freedom. Tips for growth and diversification. Now that you've taken the first step, here's how to grow your $100. First, keep learning. The more you know, the better decisions you can make. Educate yourself about different investment strategies and market trends. Knowledge is power. Next, diversify. This means spreading your investments across various sectors. Don't put all your eggs in one basket. This helps to minimize risk and maximize potential returns. Spread your investments across different asset classes to minimize risk. Make investing a habit, even if it's just a small amount each month. Consistency is key. Even small, regular investments can grow significantly over time. And be patient. Remember, investing is a long-term game. Investing is a marathon, not a sprint. It requires time, patience, and perseverance. Don't get discouraged by short-term market fluctuations. Stay calm and stick to your plan. Remember, starting small is the key. Every big journey begins with a single step. Your $100 is a powerful seed that can grow into a substantial financial tree over time. Nurture it with care and watch it flourish. So, take the first step today and watch your money flourish. The journey to financial freedom starts now.